Have you ever wondered what really happens before a company goes public? When a business decides to raise money through an IPO, investors rush in, hoping to grab a slice of the next big thing. But how do they know whether they are making the right decision? What if the investment turns out to be a disaster? That's where the Red Herring Prospectus comes in. This document is not just paperwork, it's the foundation of trust between a company and its investors. Yet, many people fail to read it carefully, leading to costly mistakes. Today, we are breaking it down in the simplest way possible with real life examples, legal cases, and insights that could save you from a bad investment or guide you in launching your own IPO. So, whether you're an entrepreneur looking to take your company public, an investor wanting to make informed decisions, or just someone curious about business law, this video is for you. Let's dive in. What is a red herring prospectus? Picture this, you're scrolling through the news and see that a company you admire is going public. You're excited, thinking this could be my chance to invest early and make huge returns. But before you jump in, have you checked the red herring prospectus? A red herring prospectus or RHP is a preliminary document that companies must submit to the SEBI or Security and Exchange Board of India before launching an initial public offering or IPO. The name might sound strange, but the meaning is simple. It contains essential details about the company, like its business model, financials, and risks, but leaves out the exact IPO price and number of shares. Think of it as a movie trailer. It gives you a preview of what's coming, but the full picture is revealed later. Now, you might ask, why does the law require this document? The answer lies in protecting investors. Without it, companies could easily mislead people into investing into something risky without full disclosure. One of the biggest lessons about the importance of an RHP comes from the Reliance Power IPO in 2008. It was one of the most hyped IPOs in Indian history, attracting massive investor interest. But once the shares hit the market, things went downhill fast. The stock price crashed by nearly 17% on the first day of trading, leaving investors in shock. Many felt misled by the company's ambitious project in its red herring prospectus. While the document technically followed legal requirements, it failed to warn investors about potential risk adequately. This incident becomes a wake-up call. Just because a company is big and famous doesn't mean its IPO is a guaranteed success. Under Section 32 of the Companies Act of 2013, a company must file a red herring prospectus with SEBI and the Register of Companies (ROC) before issuing shares to the public. Here are the key takeaways from the law. First, mandatory filing. Every company launching an IPO must submit this document. 2. Disclosure of financials. Companies must provide financial reports, business strategies, and risk factors. 3. No final pricing. The exact price and number of shares are missing in this draft. These details come later into the final prospectus. 4. Legal liabilities. If a company provides misleading or false information, SEBI can take strict action, leading to penalties or even cancellation of the IPO. One case that highlights these legal safeguards is SEBI versus Rosy Blue Securities, where the company was found guilty of misrepresenting financial details in its prospectus. The court ruled that such misrepresentations violated investor protection laws, leading to penalties and stricter scrutiny by SEBI. This case serves as a reminder that an RHP isn't just paperwork, it's legally binding document, and any false claims can have serious consequences. So, what are the takeaways for you as an investor or entrepreneur? If you're an investor, don't blindly trust media hype or brand names. Always read the Red Herring Prospectus. Look for red flags like high levels of debt, unrealistic revenue projections, lack of clear business strategy. If you're a business owner, understand that transparency builds trust. A well-prepared RHP can make your IPO successful by attracting serious investors. And if you're someone who simply loves learning about business and law, remember this: knowledge is power. The more you understand these legal documents, the better equipped you will be to navigate the financial world. We have covered some crucial insights about the Red Herring Prospectus: what it is, why it matters, real life lessons, and the legal framework behind it. Whether you're planning to invest in an IPO or take your business public, understanding this document can save you from financial disasters and help you make informed decisions. Now, I want to hear from you. Have you ever invested in an IPO? Did you check the Red Herring Prospectus before investing? Let me know in the comments below. I'd love to hear your experiences. And if you found this video valuable, please like, share and subscribe for more insights on business and company law. Also, don't forget to check out our playlist for other legal topics. The link is in the description below. Thanks for watching and I'll see you in the next video. Take care. Bye.